morning, everyone. Today is Friday, February 11th. I'm Marv Eisen of Timeless Dollar. We start the day looking at the economic calendar to see if there are going to be any announcements that are going to shake the market as they did yesterday. And today, the only announcements are leftovers from yesterday, a sentiment index, a 5-year inflation expectation, neither one of which is going to have any kind of meaning to the market price action. Price action is still going to be fluctuating by yesterday's inflation report. Moving over to the morning news, we see yesterday's inflation report is still the headline story. Futures point to further losses, although the flags are pretty much, they're in the red, but not by a lot. S&P down only 7 points. Oil, of course, is up, and I feel very happy for those guys, as I said in my video yesterday, with profits soaring. 10-year Treasury note, over 2%. So we haven't seen that in a long time, and that is a figure that has a negative effect on the market. Moving over to today's S&P, actually, this is yesterday's chart with my calculated trading zone. As you notice, the market, and I'm going to digress a little bit here because I talk about the trading zone a lot, but I also talk about gap trades. And yesterday, at the 8:30 time slot where the inflation numbers were reported, the market had been coming into the day at the previous day's close. Right over here, I have the previous day's close right here, marked by this black horizontal line. And the market immediately tanked, and right at the market open, and here's the 9:30 candle, and this is a 3-minute chart. Here's a 9:30 candle, and immediately the market started to rebound from the precipitous decline. I got on over here because I know the market has targets, and I figured, well, if the market is going to back up further from the low that it put in just prior to the open, I would hop off. But there's a good opportunity here for a gap trade. Now, the gap was filled. I didn't stay on for the gap because it reached my target, one of my target lines, shortly after the open, and I got off here. It looked like it was, and I was happy because after all, this is a really nice profit for me, and I didn't care about the rest of the day. But let me talk about the rest of the day. The market has a habit, particularly when it's dropping. People have a tendency to try to find the bottom. It's a mistake because the expression, don't try to catch a falling knife, well, that's applicable. When the market drops, it tends to drop precipitously, especially when there's bad news, because everybody heads for the exits. So if you didn't catch the early morning rebound, maybe you got the gap trade, and that would have been fine too. But I use my calculated trading zone as a target, and with the market declining precipitously, and I was happy for the day, I made my quota. So my only advice to you is try to find the trend. Do not trade against the trend. If the trend is down and precipitously down, and we all know declines happen quickly, don't try to find the bottom. If you're going to take a trade in the direction of the trend, which would be in the downside. Don't try to catch a falling knife. At any rate, this is Marv Eisen for Timeless Dollar. The market will maybe find a little lower level today. It looks like it's starting out just about at the point where it closed yesterday, which is down here at about 44.98, 5,000. So we'll see what happens today. Trade safely. Thank you very much for watching. This is Marv Eisen for Timeless Dollar. And if you'd like a little help on trading the E-minis and micro E-minis, or you want to get my daily E-mini trading zone report, which gives you the calculated trading zone numbers, and these are based on Taylor's book method, and it's been a reliable method used by professional traders for over 75 years. I'll be happy to send this to you. I send it as a monthly subscription service, very inexpensive. Anyway, have a great day. Thanks again for watching, and I'll see you in my next video.